Well, clearly the UK economy is in stagnation. I think we talk about recession. The reality is that there is no growth. We are more in a stagnation phase. Inflation is falling rapidly. So I think the Bank of England is under pressure to deliver a few cuts, but I think the market is probably a little bit too optimistic about how many cuts the Bank of England can deliver next year. So in that sense, I think the market is probably too optimistic, given that inflation is still relatively high. And, we're talking about stagnation, not a recession. So I think the Bank of England has to be a little bit cautious.
Well, inflation is higher than still other jurisdictions. It is coming down. We saw that in the latest data set. On the back of that, HSBC was saying to us, look, it's going to be August before we see a rate cut. Others in the market think it's going to happen before then. What are your expectations on the timing of the first cut and when it gets signaled to the markets? I
mean, realistically, it's going to be June. I don't think it's going to be before that. I don't think, though, it makes a big difference if it's May or September. I think it's important to highlight that as long as inflation is going in the right direction, the Bank of England will cut, but I suspect they will not be happy or ready to cut more than the market expects right now.
Yeah, if we're seeing rates or the signaling even happening just from June, will then the issue be the extent of those rate cuts throughout the rest of the year, or will it just be the signaling as to what it is they plan to do, how they hope to get the economy? Because fact is, as you said, stagnation, it could get even worse next year.
That's the issue, right? I think we always think that a recession is going to be very mild, it's going to be short, and then there is always something happening that makes much, much worse. I have to say for the UK, we are not expecting anything terrible, but it's also fair to say that, again, with interest rate that high, even a few cuts can help the consumers very, very significantly, probably more than the US. So I think it's very important for the Bank of England to deliver at least a few cuts.
Yeah, I mean, that normalization, though, is going to be one that, it's going to have to thread a tight needle here. We're saying that there's going to be, they're looking for growth somehow, and it may not necessarily be their mandate per se, but that's a consideration, right? You don't want to run the economy into the ground, but at the same time, you have to maintain fiscal, a clear sense of discipline then when it comes to these rates. How much of this is going to make the BOE consider on an everyday note that inflation needs to come down, but 2% may be a little bit harder? It's that last mile that everyone gets worried about.
Yeah, but let's not forget that the Bank of England has made quite a few mistakes in the past. I mean, has been unable to meet the inflation target for quite a long time. So I think 2% is very important, but if there are signs that the economy is going into recession, they will cut aggressively, even when inflation is above 2%.